I'd like to, welcome you all to this gathering here today on behalf of SAS and Financial Express. Sorry for the delayed start. It's, I would say, as they say in insurance, this is like a force majeure event right now. We've had multiple things happening today, and the weather is one of them. So we had people coming in a little late. But nevertheless, I think we're here today to talk about Insurance Forward. As you know, India is one country where there's a huge opportunity in the insurance space. For example, the IRDAI itself has said that by 2047, along with Viksit Bharat, they also want insurance for everyone. And that said, we're at an inflection point right now where technology is playing a large role in every aspect of our lives. And when it comes to insurance as well, it makes lives of all the insurers a little easier in terms of the amount of AI that you have now in insurance. It can help you with predictive analytics, it can help you with fraud mitigation, it can help you with risk assessment. So there's a lot that technology can do. That said, what we are planning to get out of the room today is to see how, at what level you are with, your AI deployment, how comfortable you are with your AI deployment, and we have with us also a report from the Economist Intelligence Unit on the insurance industry, and we'll get some insights from that in the course of this evening. So just to outline quickly how the evening is going to proceed, we're going to have a presentation by the Economist Intelligence Unit, and then we will have SAS also tell you what they are doing in the insurance space. And then we'd like to get down to a panel discussion here with some of you to identify what you're doing in the insurance space. And then we'll have a roundtable discussion, which we will again have people from the insurance industry tell us at what level of technology deployment they are in their respective companies. With that, I'd like to invite Barsali Bhattacharyya from the Economist Intelligence Unit to take us through the report from the Economist. Thank you.
Thank you, everyone, and hopefully you can all hear me fine. Before I start with the research, just a quick introduction about the Economist Impact, who's put this research together with SAS. So many of you might know of the Economist magazine with a red cover. The Economist Impact is the think tank arm of the same group, and what we do is we do a lot of economic geopolitical research, but we also partner with businesses, governments, foundations, and NGOs to help amplify some of their viewpoints. And we look at some really broad key themes like technology, globalization, and sustainability. And I think the discussion today might cover a lot of those points. So and I think the report is at the tables research is look at what's happening with the insurance sector and what the future could do. I think you're in the business of helping individuals and businesses deal with the uncertainties in their life and in their businesses. But I think we are at a point of time where the sector itself is also facing a lot of uncertainties. So very quickly becoming an annual occurrence, and we have reports of how home insurance cost in the US is rising much faster than disposable income of consumers is. So again, I think climate change is very quickly becoming a big challenge for insurers, even in India, right? Unseasonal rain, so very early start to monsoons in Bombay. I think earlier in the year, we saw a bad heat wave in Bombay, right? And I think we are seeing increasing occurrences of these extreme weather events, which obviously means more risks. So high incidence of heat waves might mean more hospitalization. Increasing climate change would mean more instances of vector-borne diseases, so dengue, malaria cases, all risks that the sector needs to grapple with. The second picture, any guesses what that's from, this one? That's the CrowdStrike attack from last year. Well, not an attack, the CrowdStrike incident, which basically led to a standstill. Basically, all of us had to shut down our laptops, airports, hospitals, everything came to a standstill. I think the insurance industry probably got off quite lightly out of that incident, but it did draw a lot of attention to how much of a risk digital disruption was very quickly becoming for businesses and the sector itself. And of course, there's AI. I think we're going to talk about that in quite a bit of detail today, but technology, especially AI, can be both a force of good as well as a force for a lot of difficult things to come. So both positive and negative impacts there that we need to be mindful of. So we published 2 reports, one of which is on your table. And in the first report, what we did is we spoke to about 500 insurance executives around the world and asked them a bunch of questions about where they see the challenges, what are the opportunities. And then we took a lot of those findings and created some scenarios around that to help imagine what the future could look like. So where are we now? In a very typical Economist style, we have taken some very broad themes that are affecting the sector. So climate change, I mentioned that. It's obviously a theme to watch for. It's going to be playing out in many different ways. Definitely the incidence of extreme weather events, but also the regulations and government reactions around it, so ESG regulations, and how the sector itself, but also the businesses it is working with, need to be reacting to that. The digital revolution, which is accelerating much more quickly than how businesses can react to it. The third is globalization, and really I did these slides much before I submitted them last week. If I had done these today, I think globalization might have been the first. So a lot of geopolitical tensions are happening, US, China, the situation in the Middle East, and of course there's the situation in India today with the tensions between India and Pakistan. At a global level, there are also increased risks of the pandemic. COVID-19 sort of made that really clear as to how a connected global world also means more risks that we need to grapple with. Economic and social inequalities. I think since the pandemic, you would have heard this topic come up quite frequently, and very much the truth in India, where we have a large insurance gap. A large share of the population is uninsured. And there's obviously a lot of work going on in that area with the insurance for all by 2047 target, but also with the Ayushman Bharat schemes, which is where the government is offering public health insurance for all. But a lot more to do there, and that's definitely a trend that's affecting the sector. Lastly, demographic shifts. Especially aging populations. Now, this might not be something you hear a lot in India. We have a pretty young country, but actually we are aging quite rapidly and maybe unnoticed by most policymakers and businesses. If you look at some states, so at a national level, our fertility rate has already dropped slightly below the replacement rate. But if you look at certain states, such as in the southern part of the country, actually it's the fertility rate is about 1.4, 1.5%, which is quite worrying because you have a large number of aging population, and thanks to modern medicine, they're also living for long. So that obviously means a lot of higher costs and risks for the sector. We are also seeing a lot of investment in dealing with the healthcare scenario in India. And that's also worth keeping an eye on, because as we have more aging, a bigger aging population, we are also seeing higher instances of serious diseases like cancer, for example. So I think by many estimates, India is going to see a rapid increase in instances of cancer by 2040 as more of its population ages. And again, these are factors that the industry needs to grapple with in India. We asked, when we did the survey with global insurance executives, we asked them three questions actually. We asked them what, according to them, are the biggest trends affecting their sector. And in this, the bubble chart here, we have tried to map that. So the bigger the size of the bubble, the bigger is the trend's impact on the sector. So things like artificial intelligence, market dynamics, ESG regulations, these are all sizable trends which our leaders thought are having a sizable impact on the sector. And then we asked them which of these trends they thought were opportunities and which ones are risks. Now, it's a bit of a mixed picture because anything can be an opportunity or a risk depending on how well placed you are to deal with that situation. But we actually got some really interesting answers. So we have mapped risk along the x-axis and opportunity along the y-axis, if I'm seeing that correct. And as you can see, artificial intelligence and market dynamics are both being viewed as bigger opportunities than risks. And just to be clear, by market dynamics, we are looking at things like competition, mergers, new entrants in the market. So very typical theme for any industry to be mindful of. So artificial intelligence, market dynamics are things that insurance leaders view as bigger opportunities than risks. The growing middle class is, of course, the biggest opportunity that our leaders perceive. No surprises there. That means more people who are able to afford insurances, so expansion of the market size. If you look along the risks, the biggest risk is obviously climate change, followed by geopolitical tensions and cybersecurity risks. So quite an interesting mix of things there. So the next question we asked them is, if the sector had to navigate this scenario, deal with the risks and make the most of the opportunities, what would be the key things for the sector to focus on? No surprises again, the top response was reducing costs. But what was quite interesting, if not surprising, was that a bunch of the top responses, so reducing cost, but also improved information sharing among different departments, improved claim processing time, product deployment time. All of these are things that can be done via technology. So that, I think, is quite interesting and connects very nicely with what we discussed in the previous slide about AI being something that the sector views as a big opportunity. But we did ask them what are the challenges they're facing internally in making the most of these opportunities. And some interesting insights there. About 75% of leaders thought there are lots of internal barriers to adaptation, and these include legacy systems, departmental and functional silos, and slow pace of innovation. So there is obviously the sector understands that there is a lot of potential, a lot of opportunities to be got from implementing AI, but there are some sizable challenges, internal challenges to doing so. So there would be quite a bit of need to deal with these things internally first. And then looking at the external environment, we asked insurance leaders about the global insurance protection gap, so the difference in losses incurred on insured and non-insured losses. So we asked them why that gap needs to be minimized, and what would be their incentive to do so. And a bunch of them thought that closing the insurance gap was an excellent market expansion, portfolio diversification strategy. So the responses in red around portfolio diversification, brand and reputation, profits, product affordability, all of these are motivations for trying to minimize the protection gap and ensure that insurance premiums and policies are accessible and affordable to a wider section of the audience, of the market. Quite an important thing to do, but definitely not easy, and we'll discuss more of that. So based on these key trends that stood out for us, we tried to envision 4 scenarios of the future. So, I'm sure all of you do some sort of scenario building at work. So we tried to do a little bit of that and came up with 4 scenarios. So, right, yeah. So again, just borrowing from the typical pestle analysis style, the trends that we have discussed so far, they're all in there, and we are looking at some broad trends around digital transformation, demographic changes, economic and social inequalities, governance and global collaboration, and of course climate change. And we spoke to a bunch of global experts, and based on their contributions, we finalized 2 indicators. The first one is the pace of technological change, and the second is the level of global cooperation as the 2 factors on the basis of which we would analyze and come up with these scenarios. So looking at how rapid or slow technological change and innovation was going to be, and how coordinated or fragmented the global order would be. Again, 2 very important factors for the sector. So based on this, we have come up with 4 scenarios. The first one, which we are calling fractured resilience, in this world, and we are imagining the world in 2040. So in this scenario, there's been rapid technological progress. So a lot of innovation via AI and maybe even other frontier technologies like quantum computing. But there is a lot of global fragmentation. There are geopolitical tensions, which means that there are different regulations in different markets that insurers need to be dealing with. Technological innovation always is believed to come with economic benefits, but in a fractured world, the benefits of technological innovation are not very well distributed. So there is unequal growth. Technology can also be a good solution to deal with climate change, but again, unequal distribution of that means that in this scenario, some parts of the world is better equipped at dealing with climate change than others. And in all likelihood, the world has missed its climate targets and because of inconsistent adaptation efforts. Now, in this world, because of the inequalities and lack of coordination, there is a lot of disparity between who can and who cannot afford insurance. In all likelihood, only the wealthy can afford private insurance, and with fragmentation and regionalization of the industry, the global protection gap has actually gone up instead of going down. Now, obviously, a scenario like this would have quite a few challenges. There's a lot of risk management that insurers would need to be doing. The bigger challenge is that higher prices, in an environment of high risk, prices and premiums are likely to go up, which means that more people are unlikely to be able to afford insurance. But there would be opportunities, and in this scenario, insurers need to have more hyper-localized strategies and plans and teams in place. It's also a scenario where there's been technological progress. The flip side of that is more instances of cyber attack and fraud. So again, insurers need to be well prepared to deal with that. So in this scenario, those would be the risks and opportunities to be mindful of. The second scenario is a more stable one. So here, technological innovation has been quite rapid, but global collaboration is also quite good. The world is not fragmented. Governments are working hand in hand, which means there's been significant progress that has been made in addressing climate change and boosting economic growth. Collaborative efforts by governments and businesses and development in AI means that there's been a lot more advancement in healthcare. So personalized medicines, more drug discovery, and again, a lot of major diseases like malaria. We've probably got vaccines for all of that. So health, a lot of advancement in health, and a lot of diseases that typically lead to high mortality rates in low and middle income countries, those rates have reduced. So that's the scenario we are looking at. Climate, again, we have made progress through technology and collaboration. So obviously this is quite a rosy scenario. And in a scenario like this, insurers can obviously focus on offering more personalized solutions to their consumers. And they can also make the most of the climate technology. So there's scope to be joining hands with businesses, working on climate projects early on to better manage and assess risks to prevent delays later on. But there will be challenges. There will probably be new risks to factor in, but also with any tech innovation, there are always data privacy and cyber risks to be mindful of. In this scenario, insurers need to be mindful of trust and transparency, as that's something consumers are going to be demanding from them. The third scenario is one where we have the world is a collaborative space. There's less global discord. There's less fragmentation. We're working hand in hand. But technology has not delivered on the promises that, not delivered on the wonders that was expected of it. So in such a world, there's been insufficient efforts to reduce greenhouse emissions and climate change. But and that's leading to a lot of extreme weather events, which increase risks for insurers. But there is good level of government, a lot of adaptation measures for dealing with this scenario. So in a world like this, climate will probably be the biggest opportunity for insurers, where they can work very closely with governments, other private sector businesses to try and ensure there is more capital available for these kind of projects. They would also have to do a lot of collaboration, so working together, finding opportunities for public-private collaboration, that would be important. And considering that climate change, global warming is very much a reality in this scenario, insurers would also need to think of how they model for those, how they forecast those risks. So typically when we are forecasting, we tend to look back, but with climate there is less scope to do that, and we would need to have a lot of good predictive analysis to be able to factor, to be able to generate some forward-looking risks for these for this world. The final scenario where there's technology has stalled, technological progress has not delivered, has not panned out in the way we had expected, but at the same time, the global order is quite fractured and fragmented. So worst of all scenarios, I think. Major governments, major global powers have turned inwards. So there's a breakdown in trade, in globalization, which again has been fundamental for economic sector. So that all of that a fragmented trade, global order, and as well as increasing climate instances, so rising water levels, that sort of risks and incidents are much more frequent. Businesses in such a scenario will need to look for innovation to have a competitive advantage, but they will face a lot of challenges because of different global standards. So across different countries, and regulatory barriers are going to be high and probably expensive to work around. There will be opportunities so insurers were able to do more collaboration, get together with governments and businesses. They are going to be at a better place to deal to function in this world, and there will also be a scope to customize for different risks, considering the world is fragmented and different regions and countries are looking at very different priorities. So there's scope for a lot of customization. But all that means insurance premiums are probably also going to go up. So cost management, ensuring affordability is going to be a priority. And broader partnerships with tech companies, insurtech, governments are going to be key to survive in a scenario like this. I'm going to stop now, but before I do, I just wanted to summarize some of the findings from the research reports that we have published. So what does the path ahead look like? 5 things. Climate change adaptation. This is happening. Whether governments acknowledge it or do not, it is happening, and I think insurance as a sector is probably the one that's facing the reality of the situation the most, and it's only going to get worse from here on. So it is, I think, helpful for the sector to think about how they can collaborate, how they can get the different people how they can get different bits of the ecosystem involved to make inroads on climate change adaptation. Technological transformation, again, lots of benefits to be gained from AI, but at the same time, being mindful of not having exclusionary practices, being mindful of data privacy concerns, as well as fraud and cybersecurity risks. Business model innovation. So, if technological progress takes off, and healthcare is, I think, one of those areas where AI can truly do wonders. And if you're looking at a future where AI can tell years before cancer has developed whether a person is at risk of having cancer or not. How does the industry then operate in a scenario like that? Would we be able to transform our business model to focus more on preventive care? Thinking about those issues is probably a good way to move forward. Similarly, closing the protection gap, working more closely with governments to make sure that the people are not being priced out of insurance policies, and in the same tone, public-private collaboration again is going to be key to make sure to achieve a lot of these outcomes. So thank you for that. I'm going to stop now. Any questions?